Hello, everyone. Welcome back to the RationalInvestor.co's weekend frivolity, and
Hello, everyone.
we're
Welcome
live on
back to the
YouTube.
RationalInvestor.co's weekend frivolity.
Um, well,
Hello, everyone.
keep that playing, and if I screw up the screen share, you guys over there on YouTube yell at me, okay? Anyway, nice to see we're back in the saddle and everything's humming along here. The weekend, I'm not going to get too much into broader market stuff. I think I saw that the bear was posting in the lounge a few minutes ago about Mr. Trump is at his trade war talk again, and might make for an interesting open for stocks like Apple Monday morning. And actually, this is an interesting debate going on right now. I suppose you could argue this whole sort of globalization concept. Um, Whereas historically, the United States of America has had what they've called isolationist policy, especially after things like the First World War. The Americans were very upset in having to go and sort of bail out the Brits and the French, and they sort of said, "Go away." Woodrow Wilson tried to sort of do things like, globalization, the moves towards it with the League of Nations, but the American populace after the end of the First World War just didn't have any interest in being part of that global community. And you could argue that the end of the Second World War, same sort of push was tried to be established with the forming of the United Nations and all that Marshall Plan to rebuild Europe and stuff. And to a certain degree, I suppose you could argue through the Eisenhower years, there was a push towards isolationism, and sort of a tete-a-tete with the Soviets. But fascinating how world history plays out. I mean, I would just simply argue that we are going through a certain part of the American population would like to go back to isolationism, would like to, make America first and buy American, and everything that Americans buy should be made in America. And you could argue to a certain degree that, maybe it started with sort of George Bush seniors. Do you guys remember the 1,000 points of light? And this sort of, and a lot of people talk about the Illuminati and, 1% taking over a global, control, that kind of stuff. Um, so, where did that, excuse me, where did that actually start? I don't know. But I think what's happening domestically in the United States of America is there's sort of that isolationism push back. And the only reason why I sort of mention this is it should make for some interesting trading opportunities for capitalists and speculators. In a weird sort of way, I kind of think, and I would argue this whole sort of crypto experience and the building out of Bitcoin is, and those people that have made profits off of that expansion, the writing's on the walls. People didn't really like the dilution of currency, and so they're looking for alternatives and ways that you can't dilute the currency, a la Bitcoin. Us as speculators, we're, to a certain degree, a lot of you, of course, are very crypto enthusiast and, rah, 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 and that's awesome. An old gnarly trader guy like me, it's just really a question of where can I make money? And I saw an opportunity, and I've jumped on it full bore as hard as I could. I think that we have to expect certain sense of volatility in the market, and given sort of where we are long-term demographic cycles and transitions and all that stuff, ironically enough, I actually think a lot of the policies that Mr. Trump is putting into place are really going to benefit the United States of America going forward. I can put, like the dairy subsidy in Canada. How is that fair to the American farmer if we're technically in a free trade environment? So I can completely understand it. And ironically enough, I actually make the argument we're just going through a period where the U.S. dollar is going to be heavily out of favor, and by the time we get to the end of this coming cycle, the US dollar is actually going to be reigning supreme. And ironically enough, it's going to be the policies that Mr. Trump's putting in place that are actually going to make that happen, which I find hilarious. But if anything, the whole reason why I'm going down this rant this morning was I saw an interesting conversation in the lounge just before I started this about Apple Computer. And Apple, if anything, I would argue, is the ultimate expression of globalization. Some of their parts are made in China. Some of their parts are made in Germany. Some of their parts are made in just the craziest of places. And ironically enough, everybody wants a rising stock market, rah, rah, rah. But if the isolationism policies get too thick, a story like Apple actually runs into trouble. I think, if I'm not mistaken, like 35% of all of the revenues made off of the Apple iPhone actually go to Germany, of all places. So the Germans are actually, did really, really well with this whole Apple iPhone expansion. So the point that I just make, and it was an interesting commentary I saw in the lounge, right, is, of course, what a surprise, our resident monster trader, Thomas, is short Apple here. But it's interesting as we go through these hum and haws. How do markets break? Why do markets break? All that kind of stuff. I thought it was really interesting recently. I used to have all my tweets used to automatically go straight through to Facebook and be posted there. But I noticed that that's not happening anymore. So I wonder if, that sort of social media tidal wave that we've been enjoying is also maybe, going to have to reverse here a little bit. So interesting. You never know how this crazy world's going to play out. Technically speaking, that's why we really, that's why I love things like TRISOF, right? I absolutely love that, because it's the market's way of just saying, hey, pay attention. Derivatives prices are out of whack here. Something's not right. And it often leads to opportunity. The whole idea of divergence, the whole idea of market structure should also speak to you guys too, that as speculators in the market, we just simply want to take advantage of a lot of this stuff that's going on in the world. You may not necessarily agree or disagree with policy. You can't write better fiction than reality. That's for sure. I learned that a long time ago. So whatever actually does happen, I guarantee you, none of us could write a better story. It's impossible. So you might, just enjoy the ride. You never know what that. Let's hope to God we don't end in some nuclear Armageddon. But that's just the way it goes. But if anything, I find it fascinating how, like, we'll look at things like Apple Computer and how the stock is very extended, and maybe shorting ideas should start presenting themselves. And then we see how the world sort of plays out in the way that this sort of dance is going on, and who gets hurt doing what things. What should ultimately end up happening is technically we have these little crystal balls that just sort of, they give us sort of a glimpse into the future. And especially with, things like options, formulas and stuff, where you can sort of figure out where markets are overextended and pricing is out of whack. We have this crystal ball, but we never know exactly how it's going to play out. Like, what are the specific reasons? So I just wanted to start the rant today. A little bit of a diversion. I apologize, everybody, but I thought that was really interesting what I saw happening in the lounge and conversations about Apple, and how the current political landscape actually could help the trade idea that our professional traders are taking work. I thought it was really cool. Okay, enough of Brian's blabbing. Sorry, guys. Quick update for the site. Level 2, Level 3 emails just went out to everybody. Huge Level 2 class this term. Raf's here in the lounge. We're getting him set up so he can chat with all of you guys and give you lots of support. James should be floating around here. And as I said before I started recording, Garrett, if you want to participate, you are more than welcome. Really big class. And of course, did have a couple questions about the workload. Try to understand that what we're going to be doing in the Level 2 program is literally just continuing on the path of the candy store. And we just jump right into concepts. And really, you could argue there really isn't a beginning or an end to the level 1, level 2. It continues. So as you had to put time in for each week to understand the concepts, the good part about this current term, the way we've done it, is we've allocated 2 weeks per concept, so it gives you a little bit more time to digest everything. But yeah, every single week is a new concept, and it's a steep learning curve. You're really going to have to press yourself, and of course, don't fall behind. You fall behind, you're toast. And as you can see, Seward's basically got the pages up and running. We'll be listing the class slideshows, class videos, and then tutorial videos along the right-hand side here. I really like how Seward's created that. In the interim, you can access, I sent everybody out the course curriculum document, and it has all the appropriate links, but you can always access this. And if you want to just a quick sneak peek at what we're going to be covering in the first week's presentations, everything here should be ready to go for you guys. So that was a big objective this past probably 2 or 3 weeks, is just to make sure that we could actually teach the level 2 and level 3ers off of the new site. So super stoked about that. Way to go, Seward and Julian. You pulled it off. Way to go. And you know, if anything, everybody, you know, you're gonna find little typos here and there. I already see a typo on this page, so bear with us. We're still building it out, but everything is basically up and running for you guys as well. And this is a real treat. I never expected this. So I totally wasn't expecting this, but came as a total surprise, and I love surprises, especially good ones. We have the level 2 and level 3 chat rooms set up. And you can see this cash flow Jacques guy who is in here this morning chatting away. I think I see him here, and his 13 buddies. And I was actually quite pleased to see people are sort of getting settled in. So just like the recent level 1 programs that had this rocket chat function, it looks like that's up and running. So make yourselves at home. You can see Leanne's already rocking and rolling. People are all getting settled in. And basically this is, and I think what I might actually do is just pop the Google Hangout link right in here and just, you know, have it run through this. This was a treat I wasn't expecting. So we don't even have to use the YouTube pages anymore if you don't want to. So super stoked about that. Totally awesome. And here is this Seward guy, total superhero. I got to tell you, this website is going to be an absolute monster. It's so beautiful the way that Seward has built this out. I mean, it's very the way websites are supposed to run, you know, like a infrastructure. So way to go, Seward, kicking ass. One also announcement that I should make here while I've got you is the PMA people. We have a few of them on the site. I mean, super positive people. And frankly speaking, you want more of this kind of stuff in your life, not less. And it can only help you in your trading. I can absolutely tell you that. It can only help. And by all means, you know, people, if you want to post information and links and stuff that you like, hop in here. It should be open for everybody. But Sonny and Frank and Ivan, if he is still interested. I haven't seen Ivan too much on the site, though. But definitely Sonny and Frank. We actually have a PMA meeting at 6 o'clock in the morning, Brian's time. Woo-hoo! I'm excited for that. But and what I would like to have happen is going forward in the future, maybe we have like a once a week session where everybody can pop in and the boys can tell you about their various programs and stuff that they're running. And if you are interested in counseling, they can help you in that regard. But we all just sort of work together. If you're going through a tough slog, this is a place where if you need a pick me up, this is awesome. So I was so proud of this. And again, it's just such an awesome function to this website. I'm so pleased with what the boys have done here. So site's coming along pretty nicely here. I'm actually pretty pleased with what I'm seeing. Once we sort of get all the infrastructure in place, this is the stuff that you're going to really want to chew on coming up. We actually have like a charting app that we actually paid money for. That'll be on here. We have like a 14,000 stock database. We have tons of cryptocurrency information. And when we release Fjord, and you can build your own screeners and stuff off of this, when we release Fjord to do this, this is where you guys are going to be like, wow, shock and awe. And I can understand that Fjord had to go and put all of the infrastructure together to support this. So please understand this stuff is being built out and it's coming. I'm super, super stoked. I can't get over how awesome this site is. So, okay. The only other thing that I'm going to mention before I get into looking at the markets is if you do have requests for, say, the daily briefs or this broiler chicken show, pop into this show request room. I love this, how it's right here. And I'll pop in here and I'll take a look at this stuff and I'll try and review that. So, and I see there's quite a few of you here in the lounge, and there's actually a few people over on YouTube too. You got a question, now's the time to ask and get it in there. Okay, if somebody wants to make a note, maybe put a note in the, and in fact, I'll do it now. Rants done onto charts. So if somebody wants to put the time mark or something at that when I did that on YouTube, you can fast forward to the point where Brian actually is talking about charts. Okay, specifically on the weekend, I like to just take a look at Bitcoin. Like I said, we won't look at the broader market unless there's something really pressing or in one of the questions. I've got probably about a half hour, 45 minutes here. So I'll just sort of say my piece, send you on your way, and see if there are any questions that have been asked since I've been doing this. So, I think it's a good idea, and it's not a bad idea for us, like on these Broiler Chicken Show, to concentrate on the weekly chart. Has the weekly price chart changed? Is there anything new information? And then that way, at least you have a nice base going forward for the week. So a couple of weekends ago, we talked a little bit about this fractal forming here on Bitcoin, and the fact that this candle did fire the fractal signal, I thought was fairly bullish. We'll see in a moment off the lower time frame. So I was a little bit surprised at where this rally ended. It actually, that surprised me. But I'm wondering whether maybe that's actually setting up for another move higher. And I'll sort of explain why in a bit as well. So the 3-bar fractal that fired on this weekly chart, and then, maybe we should, say slow down, go, okay. Here is the entire price range. Basically, Goldman Sachs calls the bottom down in here. And actually, it's kind of fun. I did this on project yesterday because Saturdays are sort of my day off. So that's when I like to just sort of mess around and just play around with stuff that I like to look at. So I did this chart up yesterday. So maybe to preface this sort of higher time frame analysis of the current market, we'll just start with this. I've been noticing an interesting trend that's developing here. Typically, and on the old website, I don't know where it is on the new site, but I have those sort of concentric circles that everything moves in cycles. And then you start with sort of the business cycle. Then you move to the economic cycle. Then you move to the demographic cycle. Then you move to the interest rate cycle. If you guys remember that image, is there anybody who doesn't? Maybe somebody can find that on the site while I'm blabbing away here. But typically they say that the business cycle is 4 years in duration. I know that the economic cycle, that sort of, recession growth cycle, that's usually about 10 years. So I don't know whether that's 3 business cycles of 12 years or 2 business cycles of 8 years or something like that. But every 10 years, right, the market has to sort of hit the reset button. And this is why we're all sort of freaked out right now. When's the yield curve going to invert, right? It's last recession was 2008, 2009. Here we are, 2018. That's 10 years. right? Recessions like to happen in years that end in eights, nines, zeros, ones, and twos, right? So, I mean, we're due. But within that bigger economic cycle, you have the business cycle. And did Casey just totally score some bonus points? Let's see, what has he got here? Survey says, yeah, he did. Way to go, Casey. Thank you, sir. Yeah, I appreciate that. So that's the image that I'm talking about. And Casey just posted that. Suppose we can throw it in the lounge too. Oof. And we'll put it on YouTube. Oof. The point being that this is sort of how the world, the universe works, is in these cycles. If we understand, and is it 5 years? Is it 4 years? I think the textbook definition of the business cycle is 4 years. And when I looked at Bitcoin the other day, something actually jumped out at me. And here is sort of the original bottom, 2011, coming out of the gate. This is sort of where, and I don't even know if this is the ultimate low. I think there's probably even more data that goes back further than this. The way Bitcoin was trading in the pennies for a long time. So obviously this isn't, all of the history. But I did find it interesting. 2011, we ultimately formed sort of a serious bottom. You can see the W there, coming off of a nasty face rip. And then 2015, that was actually the end. 2014, we hit that low. Then there was a cute little bottom that came in halfway through the year. And this low ultimately busted out those lows. And this, I think, was the ultimate bottom of the market. And I thought there was a lot of similarities there. Then, the following year, 2012, you can see prices substantially higher. It's about two and a half times, but let's call it, 2 or 3 times higher than where it was off of these lows. And notice that, this price here, 200, whatever, 600, 700, about 2-3 times off those lows. And this, especially with this really wild, jerky action kind of in here, this sort of screamed to me that we were sort of consolidating the base. This sort of washes out the weak longs or weak shorts, setting a high off of these original lows to move higher in earnest. And sort of same thing here. Then 2013, we go into face rip mode. And same sort of thing. In this case, 2017, all hell breaks loose. And it was really interesting because I do even remember back and I often make this sort of comment. There's one guy here in the lounge. He and I were sitting in the lounge when Bitcoin was $1,000, $2,000, just sort of banging around in here, hunting for trade ideas. Actually, I think Bitcoin might even been lower than 1,000. And it was very dull, and there wasn't a heck of a lot going on. It was the middle of February, and there was, interest was growing, but it wasn't like total insanity. But then clearly, into the end of the year, just like 2013, all hell broke loose, and of course, public went crazy. And then, of course, 2014, right, we had to go through the hangover of the not so insane party. And so I wonder, and 2018 to a certain degree has basically been that. It's just been a mess since January 1. I don't know whether we have to play out this way. I mean, nobody really ever knows what exactly these bottoms are going to look like. But long and short of it here is it outlandish to be thinking that the market could be soft into the end of the year? And I don't think it's outlandish at all to be thinking. Okay, thank you. I see somebody just joined us. Hello, Carlos. And Carlos has a bird with him. So if you can think about it in this sort of 4-year cycle, I think there's a lot of validity to this. It sure seems, and it seems that history likes to repeat itself. So, here we are, the middle of September in Bitcoin. I hear a lot of, I saw a report the other day which kind of shocked me that now I'm seeing people talking about, well, their cost of production is $2,615 Canadian. What? $3,618 Canadian. What? So your average here, and look at this in US dollars, $2,334 cost of production. That's a few toonies. What I guess it would be what 1,000, well 1,500 toonies, right? So anyway, the point of the matter here is, I don't I don't want people to give themselves sort of a false sense of, yeah, we've put the bottom in and it's straight up from here, because we're just not in that kind of market right now, guys. I honestly don't believe so. I like the fact that we are trying desperately to hold this bottom end of the range here. But you know, we are making lower highs and lower lows. If we can somehow, you know, especially let's close out this week up here, don't go through these candle body lows. It was interesting that the dump took us into those candle body lows. And I think last week maybe not last week, maybe it was through the Broiler Chicken show, I was making reference that one of our site members actually pointed this out. And I was even like, gee whiz, candle body lows. Maybe that is a pretty good sexy trade location. And I even said, you know, through the week that I don't really mind people taking their shots on the long side against the low end of this range. And it's probably this low here that we should be following closely. So you notice that dip right down into there was basically right into that tail a little bit there. It's going to take balls of steel. Don't get me wrong. This is not easy trading. And until we actually start putting in higher highs and higher lows on the weekly chart, hunting long ideas, I wouldn't be surprised if, you know, maybe 50% of them get stopped out. It's just that's the kind of market state I think we're in right now. This is tough slog. And I even on Twitter, I even said I would, I think, yeah, where the hell is it? Yeah, I had put this sort of study together of what sort of corrections sort of look like. This was the 2014 one, and sort of durations. And obviously the numbers aren't exactly the same. So, and no two cycles, is it ever going to be exactly the same? That's just impossible. So what does this path look like? I don't know. This is basically the reference from the 2014. This set up actually a beautiful harmonic failure right in here. I really haven't seen the really good looking harmonic patterns here to really justify looking further lower. Frankly speaking, when I look at the lower time frame charts, I'm kind of thinking maybe these highs that we just saw over the past week or two actually have to be taken out. We'll talk about that in a bit. But I think that until we get through this sort of hangover year, we just have to temper our expectations. I think that's really the message that I really want to convey to people. There will always be time down the road to make money on the bull side, but forcing the chain right now and demanding that the market be a bull right now, I just don't think is realistic. Start showing us some constructive price behavior, and frankly, I'd like for us to get out of this window. You know, I thought it was interesting. People in the lounge are posting articles about Vitalik and him saying that the days of insane face rips are over and all that kind of stuff. And we've talked a little bit about Ethereum lately. Really, ironically enough, I don't think Bitcoin's really the big problem here. I think the big problem is Ethereum. Where the hell is that damn chart? Yeah, it's around here. And this. Right? Well, we laughed. There's no way Ethereum's going all the way down there. It can't happen. That's not going to happen. Well, son of a bitch. There you go. It just made another new low today. Is this the bottom? I don't think so. In fact, when I look at, I had a really cool chart, but I hope I didn't get rid of it. Yeah. When you know, for the level tours, this is a topic we'll be doing through the their course is Gann angles. And you can see how Bitcoin's respecting this angle right here fairly well at the moment. And you can see how Ethereum just lost a really important angle and an arc right here. And next key support, in my hunch, is this arc. This angle is resistance, and we have a big 8-to-1, and it's an inverted 8-to-1, so it's a little bit different concept. But nonetheless, an inverted 8-to-1 coming in here. You can sort of see the confluence of price action. It almost looks like Ethereum has to follow sort of this wedge here. So if that's the case, and interestingly enough, based on Gann and horizontal support and resistance, the real major support on Ethereum right now is basically $100. So if you're Ethereum enthusiast, and of course everybody goes, stop, Brian, quit it, stop it, right? But according to Mr. Gann, this should be incredibly powerful support here. Let's see if we can show you another example of where it went. Where are the boxes? Too many lines. My head's gonna explode here. Well, I suppose you can see how that acted as a pivot there. That's not really a very good example. I can't see the boxes. Wow, I guess you could see this box right up into here. This study was originally drawn off of there to there, and it actually painted horizontal support and resistance right there. So, but again, not a very good example. I should probably, I won't talk too much about this chart because I should have it a little bit sharper if I'm going to talk to you guys about Gann. Anyway, the point of the matter here is I think that we could easily see Ethereum trade down to $100 here. Now, what does that mean for Bitcoin? It probably means that we're going to lose these levels, maybe dip down into here. But for the time being, still holding up some enthusiasm for Bitcoin if it can hold these levels in here. Interesting railroad tracks we're trying to put in right at the moment, but we'll talk about that in a moment. Okay, so bigger picture. Yes, we had a cool little fractal fire here. Interesting thing about the fractal is, ironically enough, you have to go long here and you have to risk all the way down to the bottom of the fractal, which is a huge distance. And it makes complete sense that people are like, holy crap, Brian, you want me to buy here and risk all the way down to here? You're crazy. But in essence, that is the weekly fractal level. So we've dipped into that original fractal body, well, really the candle body lows. And now we're into, we just briefly came into those tails and we were rejected and we're sort of sitting right here. The cool part about this is we could very easily, and we'll see, only time will tell. We could very easily put in a nice little inside bar right in through here. That would just be so cool. It's too big, I know. But if we can, see where the candle body low closes, and of course it's only noon right now. This candle still has another 5 hours to go. So too hard to tell what the hell this is going to end like. But if it ends like this, and then, ideally, we'd love to see this candle do something like that, open up above where that opened, and then all of the action is contained within this candle, then that actually creates a harami. And then a trade through this candle's high the subsequent week would be a really kick-ass buy signal. Sort of something like that. And then this candle over here, it comes in, space it out like that. And pretty art drawings for the day, something like that. And we trip up through the top there. Even give me a nice candle close. I'd love that. All right, that's a monstrous buy signal. Maybe I'll make it look like that, something like that. Right, that would be awesome. But that's pretty far away. On a weekly basis, I would say we've come down into the original fractal, and we're just simply asking whether these lows will hold. We do not have any buy signals on a weekly basis yet. It would take at least this, and hopefully you can see this bar, this bar, this bar. That would create a bullish fractal, and back up we go. If we lose these lows, then the fractal, ironically enough, might continue, especially if we head down into here. I've seen this happen before, where this original fractal bottom, if we then on this next candle go through the lows here, that becomes a fractal top sell signal there. And then all hell could break loose as we go through these lows. So those are sort of your scenarios going forward here. This one candle unto itself, because it made a new high, and obviously we've made a new low, maybe we're forming a diamond, right? And we're going to have to see what next week's candle looks like to see whether we get actual reversal, harami, inside bar, bullish, we can go back on the bull side, or whether we keep crapping out and heading lower and producing more sell signals. So that's sort of the higher time frame perspective. And all those investors out there, said it at least a dozen times. I'll say it another dozen times. In fact, I'll probably say it 500 times before I'm dead. We won't know that this is really a bull until we start seeing weekly W's again, right? Weekly W, breakout to new highs. 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 So, as we at the very least, we got to start seeing weekly W's. That would be encouraging. If a weekly W comes in here, then I would be talking range, and I'll be looking for these levels on the upside for resistance going forward. But there's lots and lots of money to be made on that. I could very easily see if a weekly W formed here, and we just simply use the 50% rule as an objective. I could very easily see us. Whoops, that's not the one I wanted. Where is it? It's this one, isn't it? No, this one. Yeah, low back up to the old high. Boom. All right, I like to use the 50% rule as a nice simple objective. So I don't know if the weekly W comes in. Maybe if we're really lucky, it comes in off of a break of that high, right? We hold these lows. Weekly W comes in, turns back up. There's your W, targets 50% rule. Where did I say that? That's up there. Right? And that produces a 3.25 to 1 risk reward. Nothing wrong with that trade. But we're not here yet. So investors, you just got to cool your jets. Just ain't a heck of a lot to get us too excited about. It's interesting too how the 30 SMA is now going to act as resistance going forward. So if that W comes in, you can see how the 30 SMA, we just give this a few more bars. It's probably going to, probably going to just tighten up like that. Yeah. And if this thing does W and come in, then away we go. Nice break of the moving average and a breakout. Nice W in here. That would be awesome. If that happened, I think we'd all be able to big cheer. But we'll see. Only time will tell. So we're not there yet. That means for the time being, we got to cool our jets. As I've said repeatedly over the past month or two, I have no problem whatsoever. In fact, actually, this is over like the past 6 months or so. I have no problem whatsoever. All those investors who are like, Brian, I don't have time. I am a little old lady, and I'm just going to go and nibble away. We are into green boxes. If you wanted to have yourself on a nice dollar cost averaging program, anywhere in here, and that includes here, even dips down into here. We're in the green box. If you want to put yourself on a dollar cost averaging program to get yourself into Bitcoin, go and just nibble away, little nibbles, nibbles, nibbles. I have no problem with that whatsoever. Okay, now the lower time frames coming up against these lows. I put together this chart this morning, and I thought I would just sort of talk a little bit about this. So many mixed messages. What I'm seeing here, and it sucks, right? Because moving average systems are basically moving averages are momentum indicators. We teach in the MACD module in the level 1, right? They are trend following momentum, price momentum indicators. So as a result, in ranging markets, what happens to moving average systems? Hey, any of you guys take the level 1 program? He's like, oh, he wants us to actually say something right now? I thought he was just going to talk indefinitely. What happens to moving average systems in ranging markets? They don't work well, yeah. They go wonky. They get chopped up, right? You end up working for the broker. And, this institutional moving average system is pretty in here, right? I'm a bull, I'm a bear. I'm a bull, I'm a bear. I'm a bull, I'm a bear. We haven't gone anywhere. And we used to always say, using trend following momentum systems and ranging markets, you end up working for who? Does anybody remember that line? You end up working for somebody. It's not yourself, unfortunately. But nowadays, it's not so bad. I mean, I remember when my first commodities trade, I had to pay $100 in commission. $100, and that was back when $100 was actually real money. Nowadays, $100 doesn't mean anything. So, the point is that as this sort of headline indicates, there's really only one word that I have to describe this kind of market, and that's chop Vegas. They are just chopping the market back and forth, back and forth, back and forth, just grinding people. My hunch is we're probably going to have CNBC come out and say, here's how you make money going short Bitcoins right now. And that's going to launch it back higher again. So if anything, it's critical that we obey our setups and obey our levels, especially well through this kind of market, guys. And something that I noticed and that was kind of bugging me the other day was that, the most recent long trade setup that I think we had was this sort of resolution. There's the MEX event. There was the SEC event. And that produced this trade. And what I was really worried, something I saw the other day, which kind of didn't sit well with me, is I heard a guy say, oh, well, I waited for institutional bias and I went and bought at like 6,900 right in here. And the problem is that this trade, where's that line? Sort of right in, somewhere right in there. Let's turn this off. 6,900. So right in there. And the problem is that this trade really developed off of this railroad tracks reversal in the SEC lows there. I don't mind if you trade the breakout of this funny looking head and shoulders pattern based off this railroad tracks thesis that I had. I don't mind that, but the problem is that by the time we get up to here, you can see that trade is getting really old. So hearing that, this one gentleman said, well, I went and bought at like 6,900 or so. And I was like, well, I'm going to risk against the railroad tracks low there. Because you said if these railroad tracks lows get taken out, all hell breaks loose. This trade really, it's been nagging me because this is not trading setups. There's some problems in this thinking, and it just hasn't sat well with me. If I go long here, if I'm actually playing this original double bottom, we actually teach in the school program that the W that goes like this, we actually teach that this low right here is a very vulnerable low. And we actually call this low the noob stop, because a lot of new people will put their stop just below this low. And I've seen it happen so many times. The market will come down, it will take this low out, and then it will continue on its way, and it never revisits that low. And so I've tried to teach in my programs that this is the low that you actually have to risk against if you're going to play this W. So what that really means is that if this is the big honkin' W that you're playing, then that means you got to be able to risk against this low. I know I talked lots about the railroad tracks, and this was a very powerful reversal, but I think that's exactly what just happened here. Is they just went after the noob stops against this railroad tracks low. And the sons of bitches, look at what they're doing. They're going to try and put in another railroad tracks reversal here. It hasn't sat well with me, because this is what sometimes happens in markets. And I think, we have to learn from this that, if you're going to be like institutional bias, Brian says, we got to wait for the check of the moving average. If you're going to take this trade, then your stop has to be like literally against that low that you took there, right? And you're hunting a setup off the lower time frames and off like the hour, that 4-hour chart or whatever the reversal was. That's the setup that you have to take if you're going to consider buying way up here, because the amount of risk that I really think you had to take if you were playing this original double bottom, which really sucks, was all the way down here. And I think this was just a lesson in that. And, for the person that I think who did the trade, as I spoke to you, I think you have to live with this mistake. You have to respect your trading plan that said that you were going to exit on this event, and we just have to learn from this. And if anything, we have to write, this is typically the noob stop. Was it really a good idea to be buying way up here and risking against that? That's not such a good setup. So I wanted to talk a little bit about that. If I wasn't very clear on that, that was a tough trade to see what happened here. I do believe that the institutions that were playing long setups off the moving average bias, I think they're actually taking profits into this event, because when I go boobity boo, and we'll do this orange so you can see it. Maybe a little thicker. There. Boobity boo. This actually came up and it actually hit the objective there, right? See that? So those traders that were hunting the long setups off of this tag, I think they were taking profits in here. Now, I wanted to speak to that a little bit. I don't know whether that helps. I'm not going to say trading's easy. It never is. I just don't know whether I really like that setup. That setup was a bit tough. And I think you and I both, you know who I'm talking about. I'm talking specifically to you. We both got schooled and why this setup really wasn't that great. Because I think that in essence, that was a noob stop run right there. Bang. Okay, so having said that, I believe that this was an important level in the market, and the fact that they just blew right through that this weekend either tells me that they had set up a liquidity pool and they were planning on going after it to get the liquidity. The fact that the market on that event just sort of stopped and then started to reverse higher. I really don't mind the idea of not being long setups right now. And as the moving averages have crossed bearishly now, I actually have to start thinking about bearish setups. Through the beginning of the weekend, we actually had which chart did I have it on? I think it was this one. Thought I had it a little better explained. Hold on a second. Not that one. Not that one. Maybe it's over here. Yeah, here it is. On Phoenix, right, we had coming into the weekend, there was that reload zone tag. We had sort of hummed and hawed in the lounge about, was this going to break bullishly or was it going to break bearishly? And I had even put up that, I think on balance, the momentum indicators and stuff started to turn higher here. But I even put up in the lounge, like through Friday, this was an interesting double bottom that was trying to form. Obviously, it didn't last. And 2-1 would have been just a rally back up there. So you can see that was severely tested all through the weekend. And then finally, about halfway through yesterday, there's a big dump. And at the same time as this was playing out, and that failed, you could argue that, and it's kind of a tough one because it's taking part of the range. If you take the whole range, it didn't set up, right? It was just too big. That's what she said. Right. 33% of this entire range was all the way up to here. So what I asked was, there was an initial dump, and what would happen if we just took this range and applied bot levels? And I thought it was really interesting, just off of that smaller range, how the 25 level seemed to have been respected very well through here. So there was this long setup, but the higher time frames all looked like crap. And everything was sort of pointing down. I can completely understand people would be like, are you sure you want me to go short or long here? I don't know about that. Those people that were hunting shorts, I think you can totally make the argument there was a really nice bot that set up almost textbook right off of this level. And what was really interesting was, and I noticed this on even like OKCoin, which is very rare, but even OKCoin, where the hell is it? Here it is. Even OKCoin set this trade up very, very well. And it's funny how they sort of jump from exchange to exchange to exchange. Which exchange are we going to fuck around with this month? And so, interestingly enough, through this price action, you can see everything was extremely orderly. I did notice that on the dump, and had you taken the double top, right? Hopefully everybody can see this M top here. That is the bot level. It's kind of tough. Here's a good example where you had to just have your open order working on a stop, right? There's no way you could have, worked an order and gotten your fill. It just zipped right down. I suppose one could argue, and I know guys like Grimm and stuff might have been interested in front running this bot. You can see there's a nice M up here, which gave you a fail signal here, right? And then you could have worked your orders, like Thomas loves his candle body levels for orders. I mean, I suppose you could make the argument there's the M signal there. Lots of time to get filled off of that candle body level. And interestingly enough, how that's basically set up as the, and look at this candle too here. That even confirms this M, and look at the whipsaw. So clearly there was a point on this candle where price was actually back up here. You could have gotten the trade off if you wanted to. And that dumped. And what I found interesting about this dump was we came right into move stop to scratch level. You can see it on OKCoin and on Phoenix there. I thought it was very well defined. I was quite surprised, really. So you can see here, boom, right into move stop to scratch level. And then look how the market just went and politely put in a nice little W right off that level. So as I had said a moment ago, this was it was interesting to watch this. I don't really have any commentary on who was driving the bus and what was the pressure and stuff. You can see the Phoenix market actually went further than OK Coin. This might have been all about Mr. Hayes and his market. Let's see what those lows look like. Again, this is a choppy trade, eh? You can see on MEX, this is just an absolute mess. We go there to there. There's 33. And if we clone that. So look at this, 1, 2, 3 highs. I don't know whether I'd be that aggressive, but 1 high, 2 highs, 3 highs. I think you can make the argument this trade set up. We just have to see what the levels are. Template, trade. Oh yeah, look at that. So it's set up off of there. So Life Phoenix, but unlike OK Coin, we dumped into move stop to scratch. Then the market just went sideways, hum, and then quickly jumped right back up to that move stop to scratch. So the bot had a trade on and was just politely told to get out at scratch. And I think you could make the argument now, and I suppose, I don't know whether we can make the argument off of this range yet, but there might be new there to there. If you're still thinking that short, then we probably want to see a rally up against these highs, run these stops out, maybe a nice AB equals CD, and then we'll go into 3 high hunting mode. Like we said, and if anything, I like that. I would actually like to see through today, believe it or not. I'd like to see this sort of play itself out. There to there. Over, say, the next 6 hours. If you are interested, I think it's not a bad idea. If you are trading off of this lower time frame basis, you could even, I see 1 key low. Let's see if this low's higher. That's 53.50, 54. So 53.50. This low is 53.52. So there's 1 low, 2 lows. I wouldn't even actually be surprised if there's a little bullish bot that you could actually trade through here. And you could probably use a good old LJ, right? Something like that. So we got 1 high or 1 low, 2 lows. You can see we're right up against the third one. If we could just back off and then turn up and give you a nice W, I think there's actually a long trade there. So I don't know whether it plays out like this, AB equals CD, but I like the idea of this market getting back up into sort of this 66, 6,700 area up into here. Interesting to see if there's a little gap right there. And I think I even posted that on where are we? One of these charts. One of these charts is not like the other. Over here. I remember it was off of a 4-hour chart that I had posted. Let's see. I think it's over here. Here, yeah. So OK Coin, I think, has, we could understand a new bearish bot coming in here. If we can get at least 33%, which is going to be basically a brush up against these highs. I think what I'd like to see for that scenario is this rally up and then something like that, and down we go. And that'll set up a nice bearish bot for a big move down lower. That's one conjecture, right? If we do ratchet right back up there, if we do that, then that will sort of break this kind of railroad tracks thinking. That would be a rally right up into the 9 EMA. And then we can start thinking about, the bearish bias. So assuming that the rest of today we continue to chug higher here, tag the moving averages, then set up some sort of consolidation, and then I could see this really big bearish AB equals CD play itself out. That's total conjecture. If we just park here today, right now, for the rest of today, and just sort of sit in here and close out here in this area, if we just sort of, flounder, right, off of this lower time frame, you can see the moving averages are really tight. If we just sort of sit in here, we just sort of sit in here and consolidate and finish the day relatively well, then that actually sets up that railroad tracks reversal. So, all right, one red bar, one green bar. So, and that would be like, can you guys see the head and shoulders here? Right, that would probably imply that we're heading up into like reload zones up here. So, what am I trying to say here? I'm trying to say that if we just park ourselves and just consolidate, then I think that actually sets up a nice counter trend rally into next week. If we just steamroll our way higher here up into resistance and break that sort of railroad tracks thinking, and it's just an up bar and we're rallying back into resistance, then I think that would set up for like if we zip up here, what did we say 38.2 was? Right there. So if we zip up and then roll over here and then start to 1, 2, 3 lower highs, then I can start hunting bearish bots off of the setups. So let's see what happens. Did that make sense what I said? Did any of that make any sense to you guys? I have no idea. I hope it did. Consolidation here and just go sideways, I think can set up a move up into RLZs through the week. If we just continue straight up in here, then I think we can set up for further fail lower. I suppose one could argue just on a 4-hour basis, you can sort of see just in the short term, this nice inside bar right here. So, and this is sort of going to dictate how the week finishes. You can clearly see the bull bear battle lines have been drawn. If we lose this though, then we're probably heading right back down here, and the whole railroad tracks thesis comes off the table. Right? If this just finishes as a big shooting star, then we're still in the shitter and we're still testing these lows. If we can consolidate and we don't lose the lows and just go sideways, then that sets up that inverted head and shoulders, RLZ, blah, blah, blah. If we just steamroll our way higher here, then that also breaks the railroad tracks potential lows, and probably sets up like a short-term shorting opportunity into sort of Monday, Tuesday for the Chicago boys. And really, on balance, does it make sense? Like the Chicago boys are going to come back. Does it really make sense for us to be thinking that the Chicago boys are going to be aggressively shorting right here? I don't think so. If anything, what I wouldn't mind seeing is a little bit of a gap higher to set up the next objective down lower. But we just don't want the gap too high, right? But I think, if you're going to, and this actually isn't a bad idea, if you're going to look for levels in Chicago for the coming week, do a reload zone off of this. Actually, I'd probably do the whole thing. There we go. So I do like the idea of the market getting back to 38.2 here. We don't want it to do in a straight line. We would ideally like it to go back and forth. Nice consolidation, right? And then that sets up our leg to head back up top here. To me, this doesn't really look like the best place to be short, but nonetheless, I mean, the market's going to do what the market does. And I think that you can actually use this trend line right there. Yep. That's sort of your line in the sand. So 1 tag, 2 tags. If we get a 3rd tag and you get a nice failure, right, and market structure on the other side of it, then you know that we're in the shitter. For now, I would probably just draw this trend line on your charts, and that's sort of your line in the sand, right, for the time being. Okay, I've been blabbing away for an hour or so. I hope that helps, gives you some ideas, some levels to think about here going forward. I don't know if there's anything else I really wanted to talk to you. We talked a bit about the weekly charts. And oh yeah, the daily chart. What I wanted to mention here before I let you guys go is, I'm probably overloading my computer here. Sorry, guys. Yeah, here. Now, if this thing does railroad tracks out nicely here, that would be so awesome. And have the moving averages come down and just consolidate nicely. Just give us a little bit of consolidation, please. That would be ever so nice of you. I think this actually could set up a nice AB equals CD to take us up into this sort of 7,500 area. Now, why do I say that? The sentiment in this space, of course, is extremely negative right now. This is technically the bottom end of a trading range. You know that 70 to 80% of the time, the market is going to try and hold these lows and rally back up into the top end of the range. And something that just nags the hell out of me, it's just driving me crazy. If this really was a classic range breakdown, this mountain man level should have been traded to. It's driving me crazy. You notice the mountain was traded to very politely here. So I like the idea of the market actually working its way up into this reload zone short for their ultimate short trade. This is going to be problematic because it's going to create a big W here. It's probably going to also create a big weekly W, right? Which is really going to test all of our resolves. But you know, I really don't mind the idea, especially if this railroad tracks fires, of hunting, you know, and I'd like to see these moving averages cross back bullish again, but I got a funny feeling they're not going to make it easy for us. But I do like the idea of this actually, you know, if you're going to put up a fight here, this isn't such a bad area to put up a fight. And I find it interesting that we're right back against that funny level where that SEC event happened. So the day is still young, right? We still got a good 5.5 hours or so to go on this candle. I don't know what's going to happen here. I will say, though, that I would ideally like the market just to sort of finish where it is here. And then we've got a half decent floor to work with again. And that's all I can leave you with today. I don't have any short setups. Like I said, we had a short setup that fired through here, and the short setup got stopped out at scratch. So right now I'm just sitting there going, I don't know what to do. Higher time frame players, the people that are interested in hunting long setups, I feel really badly for the people that still had their stops against this low because, like I said, I got a sneaky suspicion this was a noob low stop run. Really painful, really ugly, pain in the ass. I will mention that, of course, I was watching all through yesterday, and it really pissed me off because it kind of wasted my whole day. We did strap on one long trade that was a W, and it's basically the same thing. Where I said on the trade setup I was going to risk against this low, and I think just exactly the same as that Bitcoin, they just went and ran after the noob stop lows there. And I watched this like a hawk all yesterday and all last night. And literally they brought the market right down, and I had the alarm set, and I even said in the lounge, well, if I get stopped out, shit happens. It's a trader's life. And you can see my stop has not been hit, and so it's a big hurry up and do nothing for me right now. So tough pill to swallow there on that daily chart with that railroad tracks low and the one gentleman that I told you about. I did find it interesting. You know, here's a really interesting example, and we actually drew this chart up off of this high, and we said we were going to have to wait for the market to come down, and I even drew this sort of W off a reload zone. And so you can see that not only is it Bitcoin that's trying to put in this railroad tracks reversal, but there are a lot of these altcoins that are also trying to do exactly the same thing right here. And I even tweeted out today, I said, you know, just like Bitcoin in its reload zone, there's a lot of really interesting levels that are coming in here. And ironically enough, the public has no interest in this whatsoever. It doesn't surprise me that the traders, there's good old 78.6. Gotta love it. There's candle body lows. Gotta love it. Right? You know, in Bitcoin's case, they ran after the railroad tracks lows, and these guys, you can see they went after them, but they didn't take them out. So it's a very interesting market in that there are trading opportunities out there, but you have to be very articulate in what's going to make you act. What is your trading plan? Do I trade RLZs? Do I have to wait for this railroad tracks reversal? Do I have to wait for structure? Do I have any sort of signs of divergence? You know, do I have anything internally to justify me working? But I can definitely see, you know, if we look back and this thing was up here, I could definitely see that, you know, we're going to look back and go, those fucking traders, man. Wow, what a level that was. Jesus Christ, I wish I could be like them. Yeah, maybe you have to wait for 3 reasons. I'm not going to sugarcoat this, but I can definitely say location, definitely interesting. Okay, so we talked a little bit about Bitcoin. In fact, we talked quite a bit about Bitcoin. We talked a little bit about one altcoin trade that I have on and having to live with the results. Right? We talked a little bit about potential altcoin trades coming in here. If you are a trader, you got to get in there and take the damn trades. I think that's about all I wanted to talk to you guys about today. I hope you enjoyed the offering. We'll have Mr. Bear in the house tomorrow morning. I think he's in Mondays. So, you know, we'll have lots to review. Never a dull moment in this space. Man, there's some, look at our Litecoin coming right into reload zone here, right against these candle body lows, and now trying to railroad tracks here. Very interesting times we're living in here, my friends. Build your plan, get your risk allocations appropriate, hunt those setups to find what it is that's going to make you act, and get in there and make me proud. And of course, Zach will talk about your swing trade and day trading. Zach's our swing trader. Jacob, I don't see him around, our day trader. We'll have those models up and running for tomorrow morning. Okay, guys, I think I'll leave it at that for today. It's already 1 o'clock. I got to head out and be with the boy. Have yourselves a great one. All the best, and bye for now.